episode of Real Money Matters. Rachel Kennedy here, and I am so glad that you tune in to watch me today. And as we say every week, I'm so glad you come to us because we want to bring an awareness to you that your money matters. It matters what you make. It matters what you spend. It matters what you save. It matters how you manage the money you've worked hard for and that's been entrusted to you. So once again, thanks for tuning in. I tell you, we are so excited during this season. We're at the end of the year. I want you to call a friend, call a neighbor, let them know Real Money Matters is on the air live. And we're here to bring you tips and awareness for the end of the year. I tell you, this year is out of here. The holidays have come, and I hope you had a wonderful Thanksgiving and preparing for the Christmas season. Oh, my gosh, we have 19 more days, and I hope that you've saved and you've prepared, and I hope that you don't get caught up in the hype of the giving that you forget the reason for the season, and that is Jesus Christ. So call a friend, call a neighbor, go get your favorite drink, whatever it is, coffee or tea, milk juice, whatever. Get you something to write with, your tablet, your laptop. We're going to take notes because we have a great show for you today. As I had told you before, we have someone here that's going to talk to you about tax problems, IRS. Wow, why do people get nervous when you say the IRS, because my thing is, don't be afraid, just be prepared. And so that's what we're here today. We're going to give you tips on how to resolve tax matters and issues. This is the end of the year. You need to prepare and make sure you have all your records in store, because once you get your tax prepared, you want to make sure that you have everything in order. You want to know what you have. Did you have a refund last year, or did you owe? And so based on what happened last year you want to be able to determine this year how you're standing with your taxes. So we have someone here that's going to come, that's going to have some expertise, that's going to help you in that matter. I wanted to mention also that we are continue to have the buzz that's going out. There is a buzz. I'm telling you, the buzz is the B word. Oh, I've been talking about the B word. What is the B word? It's a budget. A B word, the budget. It's not a bad word, but it is the best word for your money. And I want you during this season to keep in mind, not to overspend your budget. If you haven't saved for Christmas, then you need to start saving for next year for Christmas. Don't allow the holidays to take you out of your budget. I encourage you not to go into debt this season. Oh my gosh, there are so many other ways that you can be a blessing or give to somebody else without money. You can bake some cookies. I tell you, when my daughter was younger, we used to bake cookies, and my husband and I, we first got married. We didn't have a lot of money, but we improvised and we found stuff. You can make cards. You know how much a card costs in the store these days? Oh my gosh. And a lot of them are impersonable, and they don't really express your feelings towards a person. Get you some, with the computers and things we have today, they have programs and Word and all these different programs. You can easily create your own greeting cards. That would save so much money, and it would mean so much to someone to know that you made them a card. You remember how your children used to make cards for you and they'd look raggedy? But we didn't care. You know why? Because it came from a place of love. And that's what we want to make sure we demonstrate during this holiday season, the spirit of love and of giving. And we want to continue that. Think about volunteering. Oh my gosh, this time of year, there are so many volunteer opportunities to help the homeless, to children for kids for tots. There's so many programs that are designed around this time that you can go and volunteer and help serve dinner, help pass out items, or do something like that. Do something different, especially if you have children. Get them involved. Let them know it's not always about getting. Let's talk about giving and giving back in a way where it's not going to cost us a whole lot of money. But how many your time is money as well? Because when you put yourself out there, your time is valuable, just like money. Sometimes you may have more time than you have money. So you need to reevaluate that and be able to go to a place where you can enjoy the season. Spend time with your family. Oh my gosh, I encourage you that. Sometimes we get so busy in this world, caught up, running here, running there, doing this, doing that. Let's spend quality time with our families. I want you to begin to start planning for the next year. I want you, before this month ends, I challenge you, have a meeting, a family meeting. Our family, we do this every year. We have a family meeting. We sit down and we we come up with goals, what we want to do next year, what we want to do the first 3 months, the second 3 months. Have a plan. A budget is it's just a plan for your spending, and people think it's so restrictive. I can't. But think about what you can do. You can be in control of your money. You can tell it where to go, because if you don't tell it where to go, guess what? It's going to leave without your permission. So we're here today. I'm just encouraging you with a few things. I'm going to get out the way here because we have a special guest that's coming, and I want to give them time to talk to you about IRS and tax matters. So we're going to take a small break. We're going to get them set up here, and I just want you to call somebody, let them know Real Money Matters is on the air. We want your questions. If you have questions or comments, or even if you want to call in and ask a question, feel free. My email address is realmoneymatters@RachelRKennedy.com. That's very easy. The name of the show and my name, Real Money Matters @RachelRKennedy.com. So I want you to email me. Feel free to call the studio. We're going to address some real serious issues concerning IRS matters, and I'm so excited. So we're going to take a short break, get it all set up, and we'll come back to you with our special guest, and I'll tell you more about him when we come back. Thanks again. tuning in. Again, hopefully you've called a friend, called a neighbor, let them know Real Money Matters is on the air. And as I told you before, we have our special guest here. But before I introduce him, I have a quote for today that's going to go in line with what we're doing. We're talking about IRS and tax matters. And I ran across this quote, and the quote says, "Did you ever notice that when you put the words the and IRS together, it spells theirs?" It's their money, right? And that author was unknown. So I just wanted to bring that to your attention. I thought that was cute because people get nervous when you talk about the IRS. And so our special guest here today has been doing accounting and taxes for a long time, and I've known him, and that is none other than Mr. Harold Montgomery. And I wanted to say welcome to the show.
Thank you,
It's glad to have you here. So tell us something about yourself. Tell us about your business,
Sure.
how long you've been doing this, and give us a little information about yourself.
I have been practicing public accounting for approximately 27 years.
Wow.
And I've always wanted to have my own firm.
Mm-hmm.
I started off years ago with PricewaterhouseCoopers.
Wow, I remember them.
And then I had worked several jobs and then decided that I wanted to actually start my own firm. And
Wonderful.
we did that just roughly 27 years ago.
Wow, that is phenomenal. And you know, a lot of times when we work in our professions and things, a lot of times we make money for other people and do things
That's right.
for other things, but it takes a special person to step out and say, hey, I could do this for myself. So I appreciate what you're doing and the expertise. And I know, in knowing you down through the years, that you have become an expert or a specialist with the IRS. Tell us a little bit more about how you deal with the IRS and just some situations that people would need to contact them.
Sure. One of the things is that you should make sure that you file on time. That's very, very important. And also you should file your correct income.
Okay.
And because if not, you could be subject to quite a few penalties and fines.
Okay.
So in some cases, those can be waived if you have what they call a reasonable cause.
Okay.
And what that is mainly is if you're sick, if you have a death in the family, and those sort of things, then that is considered reasonable cause, and it may be waived. It's not a must, but it is a possibility that it could be waived for you.
Okay. Now, why are people so afraid of the IRS, you think?
Well, what I think throughout the years is it's the unknown.
Yes.
It's the unknown.
Yes.
And maybe somebody has actually owes taxes. They don't have the money. And they say, well, what am I going to do? I don't have it. I just don't know what to do. So really, I just think it's the total fear of the unknown.
Right.
But the best thing to do in a situation that way is to call them and to try to work out an installment agreement. And it's something that you can do on your own if you like.
Okay. Now, do you recommend that they do it on their own, or did they get a professional help?
All depends. You can do it on your own, but if you are intimidated, because there are rules that you have to go by.
Okay.
And if you don't follow those rules, you may not get the installment agreement.
Okay, well, let's start with, how does one determine what causes one to either get a refund or have to owe? What causes that?
What the requirement is, if you are a wage earner, your employer will take out the taxes that you owe. Okay. However, you could file exempt, which maybe you shouldn't. There's roughly 3 requirements that make you file as an exempt person. But if you're not exempt and you don't have anything withheld, then at the end of the year, you are going to owe money.
Okay.
So as a result, you owe the money plus penalties plus the interest.
Okay.
All right. Now, what should happen is that you should have enough withheld so at the end of the year, you either break even or you have a refund.
Okay. And
your job.
The amount is withheld is based on them filling out
your W-4.
Their W-4.
Yes.
And based on their dependents and things
Dependents,
of that nature.
exactly.
And so a lot of times people will overstate that and don't have enough coming out.
That's right.
That will cause
That's when you have a problem.
Yes.
That's when you have a problem. You know.
So you want to make sure, and this is the end of the year, so make sure you visit that. I know from experience that a lot of times people at the end of the year increase those
That's true.
dependents so they can get more money now for the holiday season. And I don't recommend that.
Well, you shouldn't do it. You shouldn't do it because at the
people
end,
do
that's
it,
a very expensive loan because you have to pay the penalties
right.
and everything, and you don't want to do that.
Right.
It's just not a good way to really manage your funds.
Right. So if you were in an old situation last year, you definitely want to make sure that your W withholdings are correct. So this is the beginning of the year. You can't do anything about this year.
That's right.
But we can plan for next year.
Well, you know what? Let me just add one thing.
Sure.
The rule is that 90% of your tax liability should be withheld by December 31st.
Okay.
Now, you have until January 15th of 2014 to pay in 90% of your withholding.
Okay. Okay.
So that will make you so you do not have a penalty for underpayment.
Okay. Well, okay. I didn't realize that. So at the end of the year, if your employer doesn't withhold enough, you still can evaluate that, and you have until the 15th of January that you can put in like an estimated payment or something.
Exactly.
Okay,
exactly.
to offset that.
Exactly.
Wow. Okay. See, I learned something new today. That's wonderful.
Yeah.
So, say someone does owe. Explain about how they can resolve that matter. Does it matter, like if they owe a certain amount that they need to how to address it, set up a payment plan, or what are the limits on with that? Or?
Well, the best thing is if you find yourself owing money after you prepare your tax return, there are several things that you can do. You can borrow the money from another source, which is probably the cheapest to do.
Okay.
You can borrow the money. You can take the money from your own resources.
Okay.
You don't have to pay any interest at all for that. However, if you find yourself not having the funds, you can call the IRS and request an installment agreement.
Okay.
The problem with the installment agreement, it will cost you $150. That's the user fee that you have to pay. And you have to pay penalties and interest, which makes that quite a bit of money.
Okay.
But if you don't have any other resources, that's the only way that you can go. Okay. So the best way is to borrow it from another source and not from the IRS.
Okay. All right. Now, what if they owe thousands of dollars, like $10,000 or something? What if it's a large amount? Is there a way to resolve it without, doing an installment plan? Is there another method of?
Well, you can do what they call offer and compromise.
Okay.
Now, the problem with the offer and compromise is that your compromise, that's the amount that they're going to write off. Supposing you owe $10,000.
Okay.
And you only want to pay $1,000.
Okay.
That's possible.
Okay.
But your net worth and what you're going to make in the next 5 years has to equal $1,000.
Okay.
All right, your net worth.
Okay.
So if it doesn't, whatever your net worth is and whatever you can make after your expenses from your job for 5 years, that is the offer that you'll have to make.
Wow.
Okay, so that only works for people that really do not have a lot of resources.
Okay.
Then you can actually have the offer and compromise. Or if a person owes really tens of thousands, then the offer and compromise can be that amount. Now, the offer, we're doing 2 right now in the office.
Okay.
And what has happened is that I just got a call yesterday.
Wow.
They called us. They said, we looked at the offer looks good, and we want to make sure that your client is current with their taxes. So you have to be current because they do not want you to do an offer and compromise and then you're behind. Right.
Because you want to encumber everything.
That's right.
Now, what about people who have never filed or missed years of filing? How does that affect their life?
Well, the first thing is that if you make above a certain amount of dollars, I don't have it here with me, but you're required to file.
Okay.
And if you don't file, then you're breaking the rules.
Okay.
Okay, that's the first thing. So if you say you have 10 years of filing, we did a return for a guy, he hadn't filed for 10 years. So we did all the returns for 10 years, and he owed dollars.
Okay.
And we filed everything. Now he's up to date.
Okay.
And he's in a installment agreement, a long-term installment agreement, because he owed quite a bit of money.
So they go back several years? You can go back, how many years can you go back and file?
You are required to file each year that you're required. So you still have to go back and file those years because you're required to file. Okay.
So if you were entitled to a refund from 10 years ago, they would give you the refund?
No.
Okay.
Your refund is only given to you within 3 years.
Wow. So see how they... Oh my gosh, I'm not going to say anything, but...
So if you have a refund from 10 years ago and you file, they're going to keep that.
Wow.
Yes.
And they won't put it against if you owe something?
It's gone.
So see, that's good to know. So if only 3 years, you can go back and claim a refund.
Yes.
But you can go back as far as long you've been earning if you owe.
Exactly. That's right.
what does my quote say? It's theirs.
That's a good quote, right?
Yeah, that's a good quote. The IRS, theirs. Oh my gosh, that is. So, what about like liens and levies? When is it that serious that they have to pose a lien and a levy, and then maybe kind of explain, the difference of what is a lien, what's a levy?
Okay, a lien is if you owe the IRS X amount of dollars and you don't pay them.
Okay.
After a period of time, they will place a lien against your assets.
Okay.
That means that if you sell something, there's a lien.
Okay.
And you're going to have to pay them the amount that you owe them before the lien is released.
Okay.
Now, a levy is very, very serious.
Okay.
If you owe the IRS dollars and you don't pay them, they can levy. That means they can take money from your bank account.
Wow.
And go right to your bank account and take the amount that is due.
Wow.
So what happens is, to prevent that, you should call and set up an appointment and work out an installment agreement, if you can,
Okay.
at that point.
Okay. Wow.
So that doesn't happen. What happens is, I find that people ignore the letters.
Okay.
They put them away and they don't address it.
Yes.
If you don't address your problems,
Yes.
those are the things that will happen.
Yes.
And they will collect on you.
Yes, that is so important. If you get a letter, or even if you know, and you know what, if we just resolve matters, it'll be such a stress and a weight off of us. And a lot of times, if you address it, it's not as serious as you think it is.
That's right. That's true.
And we get these, and that's the same things, even with your bills, they come in the mail, ignoring them does not solve it. That just adds more stress to your life. It's better to know what you're dealing with.
That's right.
And then find a solution. There are solutions. You just have to be diligent and want to create a solution for your problem. Ignoring it doesn't make it go away.
That's correct.
It doesn't.
That's correct.
It makes it bigger. It's like that big elephant in the room. You know it's there, and you just kind of like, there's no elephant in here.
So
big
true.
Old white pink
That's
elephant.
So true.
And it's just so obvious.
That's so true.
So it's like, get help. And there are people here to help you. There are professionals. If you're not comfortable with yourself, you can always seek professional help. And that can be financially or otherwise too. If you need professional help in other areas. Oh, I just had a moment. Forgive me here. So tell me about garnishment then. What are garnishments? How does
a garnishment is the same thing as a levy.
Okay.
It's the same thing.
Okay.
Whereas the IRS doesn't necessarily have to go through a court. A garnishment is something that's issued by the court from another creditor.
Okay.
And in terms of the levy, if certain conditions are met, the Internal Revenue Service can levy your funds out of your bank account.
Okay.
That's what happens, yeah.
Wow. So with the garnishment, they go after your employer.
Well, yeah, they can go after your employer too with a levy also.
Really?
With a levy, yeah.
Okay.
Oh, yeah, both.
Okay.
Those are pretty bad. That's where they collect whatever they can from you based on your resources that you have.
Okay. Now, what about business owners? Maybe talk a little bit about their tax situation, because it's a little different than individual personal.
If you own a business and you employ people, you are personally liable for the trust fund. That is the money that you have withheld from your employer's check, from the employee's check. So what it means is that if you are an officer of the corporation and you write checks, or you have the ability to write checks, then you are responsible, and you could be held totally accountable for the trust fund.
Okay.
And unfortunately, that can be quite a bit of money, because we're talking about payroll.
Right.
If you look at any business, the largest expense on the income statement usually is payroll.
Yes.
So if you don't pay the taxes on time, then one of the biggest problems is that if you don't pay the payroll taxes on time, there are penalties. You have a penalties for late filing, a penalty for late payment.
Wow.
Sometimes the payments are as high as 25% of the tax.
Wow.
Which is huge.
Yeah, that's very huge.
So that's what the individual could be responsible for personally.
Wow. So as a business owner, you take that personal liability.
Yes.
And we've had a client like that, so we know.
Yes, we have. Yes.
Yeah, and it's like, oh my gosh, they really are serious about, you filing and being timely. So it's your due diligence, even as a business owner. Make sure that you're filing your proper paperwork. Like I said, if you don't you don't know how to do it, or your staff doesn't, you have to seek professional help, and you have to get those that's going to help you to do that, because you can do it, and it's all about planning and knowing what you're doing when you go into your business as well. Now tell us about audits. Is that a random thing, or is it something that triggers an audit, or what has been your experience with audits?
We're going through a audit right now
Okay.
with a client, and what usually happens is I don't know how audits are actually selected,
Okay.
but the tax return is reviewed,
Mm-hmm.
and as a result, there are certain items that need to be looked at.
Okay.
So you're responsible for going to the audit,
Mm-hmm.
giving it to the particular person that's going to look at it, and they will ask you for support, because
Okay.
when you prepare a tax return, you should have proper support.
Yes.
That means documents to support your income,
Yes.
and then that's what you put on the return. If you don't have the support,
Mm-hmm.
then the deduction can be denied.
Okay. And then that
Then
could
you will owe additional funds.
cause you to owe more.
Yeah.
Right. Okay. So my thing has always been not to be afraid of an audit. You just have to be prepared. Like you said, have
That's
all
right.
your receipts,
That's
have
right.
all your documentation, because as long as you have it written down, that's all they're
Exactly.
looking for, because it could be
Yeah. But
substantiated.
one of the things I find is that with business owners, a lot of times they're so busy making money in their
Yes,
business,
yes.
they don't keep proper records.
Yes.
So your
yes.
greatest defense in a audit is
Yes.
to have proper records.
Yes,
That's
yes.
your greatest defense.
Yes.
So if you don't have those, then it's a problem, because you're not able to really defend yourself
Right.
and prove what your income is,
Right. And
or
just,
your expenses.
Exactly. And just having it come out of your account doesn't necessarily mean that it's a business expense.
That's right.
Because
That's right.
the receipt, because you can go, like, say, to a regular store and get business supplies, but you can also get personal stuff. So if you're at a store like that, you have to be able to substantiate that it is a legitimate business expense.
Something that's just come to mind. The one thing that we should all know in business is that to have a valid expense that is deductible, you have to have both a canceled check and the invoice.
Wow.
You have to keep both of them.
Okay.
I'm finding that a lot of my clients are not keeping the invoice, but they keep the canceled checks.
Okay.
But you have to have both in order to have an expense.
Wow. And
That's in the tax code.
Now with nowadays, banks are not sending you the actual check. Sometimes they do an image, sometimes they don't. Sometimes you have to request it.
Yeah.
What do you recommend in that case?
What I recommend is that when you open your bank account, request the bank to provide you with copies of your checks,
Okay.
front and back.
Okay.
All right. It may cost you a little bit of money, maybe $5 a month, but as a business owner, you're responsible for having canceled checks and your invoices.
Okay. So I think that's important, because with businesses, you have more accountability.
That's
so
right.
there are more
Yes.
expenses that you would have to have. So
That's
opposed to an individual,
That's
you wouldn't
right.
need that. So that's just a regular business expense, so you would have to inquire. Okay, so good. So what about what has been the most challenging business or tax thing you could think of that you've dealt with with the IRS that's been in your experience? I know you've had a lot of experience with that.
Yeah.
What's
Yeah.
the most the biggest thing that you've dealt with the IRS?
Well, I would say it's for the taxpayer, no matter what size it is, it's really a big deal for them.
Okay.
All right.
Okay.
One of the challenges that I have had is where we try and have the field agent understand that the client has the money to pay and is going to pay, but
Okay.
they can't pay right now because maybe they don't have the collection of the receiveables.
Right. Okay.
All right, because
Okay.
maybe you have a receivable issue.
Right.
And what I tell the clients to do is that the IRS will collect on you, but if you have the receivables, maybe you can sell the receivables and get your cash for it and pay them. The key is that you have to pay your liabilities on time.
Okay.
If you can't, try to arrange financing for your business to make sure that you can pay your receivables or don't have a payroll.
Okay.
Okay. At times, maybe you can't have a payroll because you're going to have to pay net pay. You should never do that.
Okay. Okay. Wow.
And
So.
go ahead.
Oh
I'm
no!
sorry.
So go ahead.
Yeah.
No. Yeah.
In really in terms of the largest problems that I have seen, they have been mainly with businesses that had no records and they're being audited. Now that is a nightmare. Where you have audit going on, and maybe this is usually an account that I have gotten from somewhere else.
Okay.
We have a tax return and there's no support.
Okay. Yeah.
No support at all.
So that's the main thing.
It's a major problem.
Keeping records are so important. Even as an individual, as a business, especially a business owner, and you have such a responsibility, and it's more than you just making the money doing what you do. It's also being accountable and keeping excellent records. And also that's good so you'll know if your business is even profitable or not.
That's right.
If you're just spending money and getting money and spending money, you don't even know if you are, have a profitable business.
That's right.
And then you can know how to analyze what is really where you can cut back, or in some areas that you may be overspending.
Yeah, you know what? I'm really glad that you mentioned that. One of the things that I see as a problem with a lot of businesses is, especially the ones that have just started, is they will set their pricing what the guy on the corner is doing.
Okay.
They don't set their prices based on their overhead and the cost of their service that they're providing.
Yes.
It's not, you don't charge anyone exactly what somebody next door to you is charging. You look at your costs and the expenses that you have, and you develop your own costs.
Okay.
Now, there's a formula that I want to give you. It's a break even.
Okay.
You take your fixed costs.
Take your fixed costs.
Plus your variable costs.
And your variable costs.
Plus the profit that you want to make.
Okay, that's the key there.
Right?
Yeah,
and
the profit you want to make.
that is equal to your break even.
Wow.
So
then you know that's how much you have to make.
Irregardless of what your competitor is doing, you may have a competitor that has a higher fixed cost than you that has to pay more.
I got you. Wow.
So therefore, you can offer your services and still make money.
Okay.
Because your overhead is lower.
Wow. So your fixed costs are like your rent, your insurance, things that are the same every month that you know you got to do. Your variables are your utilities, things that change. You do an average of all of those.
And those things are things that vary with production.
Okay.
Such as your volume goes up, your variable costs go up.
Yes.
So you have to cover those, but your fixed costs will be the same.
Yes.
So every business, from what I'm seeing, a lot of the smaller business can be extremely competitive and charge less and get a bigger market share, and they're still making money for the owner.
Wow.
If they go through what I just told you.
Wow, and that key thing that I got out of there was the profit you want to make.
The profit you want to make. That's right. That's
wow.
right.
Oh my gosh, we should just do a thing on business. I mean, really, because it's like so many people nowadays, you need multiple streams of income. If you're working for an employer, you need to find out how you can make that work for you in your life. Instead of you earning money for them, you can earn money for yourself.
Absolutely.
Especially if you're good at what you do.
Absolutely.
And if you love what you do. Now, if you don't like what you're doing, I don't encourage you to start a business.
That's
because
true.
a business, you have to love it, because you're going to spend so many hours investing in it. You're going to invest time and energy and effort. So you got to love it, and they said if you can do something you love and don't get paid, then that's where your passion is. Then you got to find a way to do it and get paid.
That's right.
That's the bottom line. But I love that about I'm going to add that. Oh my gosh, that was just a revelation to me today. But we really definitely got to come back and talk about business.
Sure.
Entrepreneurship. I think that's a good way for home-based businesses are so good, for the taxpayer. In your experience, what is the advantage of someone having a home-based business?
Well, it's really overhead.
Okay.
Because you can offer a product and a service and have very little overhead.
Yes.
So your competitor has overhead. Maybe they have a building and an office, and you don't have that.
Right.
So those are costs that you don't have to cover.
Wow.
So you can offer the same product at a lower price.
That's wonderful.
And get more customers.
Yes, and I definitely encourage that. And we're going to bring you back again and maybe talk about businesses. But before we end and close, and thank you so much. I appreciate I've learned.
Sure.
I've learned something. And it's like, wow, this is really eye-awakening here. So don't be afraid of the IRS. Be prepared. If you need help, seek help. I just want you to share with us some of your, services that you offer, and maybe the name of your business, and how people can contact you if they want to have your services.
Sure. You can contact me. I have a website. It's montgomeryco.biz, B-I-Z.
Okay.
And the types of services that we offer, we perform audits, compilation reviews, taxes, and we work with people that have tax problems.
Wow.
Those are the things that we do.
Yes, and he's very good. I tell you, I recommend him. And he's very professional. He's had so many years of experience, and you can't outdo experience, I tell you, because it's so comforting to know that somebody's already walked that path with several other people. So your matter, he'll take it to heart, and he'll get you the results you need. So once again, thank you for coming on
Rachel,
the
thank
show.
you for having me.
This
Thank
has
you.
been really
Thank you very
nice,
much.
and we're going to come back and we're going to talk about business on another time.
Great, sure.
Yeah, all the advantages of a business and the things that they need. So you've learned something. I know you have. Feel free to contact him. His website is Montgomery Co. That's MontgomeryCO.biz. And
let me give you the phone number.
Oh, yes. Give him the phone number.
The phone number is 248-557-2881.
All right. Again, 248-557-2881. Feel free to give him a call, and he will help you with your matter. Don't ignore it. Address it, and it will get done. So until next week, I tell you, the time just got away from us. Just remember that your money matters. It matters what you make. It matters what you spend. It matters what you earn. It matters how you manage the money you worked hard for, and that's been entrusted to you. So until next week, remember, it's your money. Make it count.